Want to bring in Wall Street Journal Global Economics Editor Jon Hilsenrath, Mr. Fed himself, Greg McBride of Bankrate, Cornerstone Wealth, Jeff Carbone, and NatAlliance's Andy Brenner. It's great to have all of you here, guys. Jon, I do want to start with you. A lot of talk about the delivery of Jerome Powell. You've been watching the Fed for so many years. What do you make of his kind of relaxed and open stance when he answered reporter questions?
Well, what really struck out to me today was just how positive Jay Powell is about the economy. He couldn't say it often enough how strong the labor market is, how strong economic growth is, and also how inflation is near the Fed's 2% target. You know, it looks like a Goldilocks economy right now. And what I would be worried about if I were in the markets out there is that, you know, these are the moments when we start seeing excesses build. When everything is looking great, that's when you start to see something overshooting. Jay Powell is very, very confident, very positive. You have to start wondering if the Fed is perhaps getting complacent about something.
I don't know. There's something going on. Dow at session lows. Andy, did he miss anything? Is he missing the mark, in your opinion, in any way?
Absolutely. I think there's tremendous systemic risk in the markets right now. I think it starts with emerging markets. I think they're teetering, and I don't think Europe is much better. And what I'm really looking forward to see tomorrow is what Draghi says, because I think he sees it, Powell doesn't. And I think that's going to be a real problem over the next 3 to 6 months. Granted, John's absolutely right. I mean, he was very positive on the U.S. economy, did a great job, kind of soothed things. But I really think that the Fed is out there. They're the only bank that are raising rates right now. Everyone else is staying pat. And I really think we're going to have some major problems.
You know what, Jeff? He did bring that up, though. He did say, quote, trade changes could be disruptive. So he did acknowledge that we are in the middle of possibly a trade war with several countries and regions throughout the world.
Absolutely. As Powell mentioned, it's, you know, and just recently the guest said it's a Goldilocks. Do we raise too quickly? Do we raise not enough? It's really, we're going from that QE to QT and qualitative easing to quantitative tightening. The markets have to change from a market-driven, Fed-driven market to fundamentals and earnings. And I think with the earnings season starting in just over a month, we're going to see positive earnings. As Powell mentioned, the economy is strong, unemployment at lowest it's been since 2000, and GDP probably at the best run since 2015. So a lot of positive fundamentals, earnings, that I do believe this market's still in the early phases, and I think not in the early phases, but kind of still has some momentum left in it, and I believe we're going to see some positive towards the latter part of this year continuing.
Right. Despite the fact we're pushing session lows right now on the Dow, Greg, they did say, and I'm going to read you the quote here, recent data shows household spending picked up, business investment growing strongly, but we watch the home builders getting really smacked right now because we're looking at a higher interest rate and buyer for the consumer.
When there's such a limited inventory of homes available for sale, you can't buy it if it's not for sale. Home prices are going up. You layer on top of that higher mortgage rates. The fact that wage growth has been, for many households, hard to come by. Even though the economy is going, very well, in the words of Jay Powell, that's not necessarily a great environment for home buyers just because of the limited inventory of homes available for sale and the continued budget pressure that households are going to feel as not only interest rates go up, but inflation as well.
You know what? Also, Jon, I mean, we talk a lot about the Fed's new moves. They're not going to be giving us any guidance anymore. They were very clear about that. And we're going to have a news conference after every decision. I mean, what did you make of the change in language on that? There's debate about why they're doing it.
Well, I mean, I think Jay Powell wants to get back to a more normal world where the Fed isn't telegraphing everything that they're doing. And by going to a news conference every meeting, that gives them the freedom to act at any meeting that they want. So I think he's trying to untie his hands a little bit. You know, the one other point that I would make, which is kind of apart from the Fed, but looking at this market dropping in triple-digit levels, the Wall Street Journal is reporting this afternoon that the Trump administration is preparing to move forward with tariffs against the Chinese, and I think that might have something to do with why the market is down this afternoon. It's not really just about the Fed.
No, you're right. That crossed at 2:47 p.m. That's when we saw a movement. Really quick, Andy, to you, the yield curve we saw that talked about a flattening yield curve, but also we saw the 10-year Treasury jump above 3%. What does that say to you?
It says to me that people are not as concerned about inflation, and that, again, that people are going to look to the Treasury market of which to possibly buy. But you know what? As 2 10s down to 40 or inside 40, and they could really trigger down to about 20 by the end of July. We think that's going to send some pretty unusual signals, and we think that's going to be another problem.
The market's giving me a signal right now, and that's that they don't like this decision. Dow down at session lows, 124 right now. Jon Hilsenrath, Greg McBride, Jeff Carbone, Andy Brenner. Gentlemen, thank you very much.